Hello, fellow traders. 'Tis I, the Rumpled One, coming to you on Friday, November the 8th, the year's 2024. Let's talk trading. Weekly wrap up. As always, these videos are for educational purposes only. Your results may differ from mine. And a reminder, never lose any more on any single trade than you are willing to lose. Just to let you know, everything's okay with me. I was up kind of late on election night, Tuesday. That's why I didn't get out a video on Wednesday. So, and you know, I'm not doing videos on Thursdays because of other obligations that take me away early in the morning. But anyway, all is okay, and it's been one heck of a week with the Trump victory. It's definitely made the dollar seem a little bit stronger. All the gaps have filled, probably due to the volatility. You can see here we've got another range of over 100 pips, to put it mildly. It's more like 200 pips. This is like back in the old go-go days. And once again, we did fill that gap. We had a gap down. Actually, no, I'm sorry. We had a gap up. We filled it. Now, the range. This is very interesting here. You can see the opening range for the month. We definitely broke out of that a couple of times, both sides. Opening range for the week. Once again, we went right through that, through both of those ranges. But as you can see, we're still above the opening range for the year. In fact, and we still seem to have a green month here, as we can see on this chart. And for the year, 233 above the open, 489 off the high, 645 off of the low. And we haven't pushed that range this month. Yesterday was an inside bar. We haven't challenged either the high nor the low today. Lots of inside bar action to be had. Oh, you know what? It looks like I was looking at the monthly or the weekly range. That's not the daily, that's the weekly. So when we get back here to the daily, we only have 61 pips today. But we do have the yen pairs. Seems like a lot of them are over 100 pips. Pound yen doing what it used to do at 181. Dollar yen, 123 pips. Looks like it pulled back off of, I think it had a high of 154. Let's see. Yeah, we were in the 154s. And if you look to the left here, you can see it's a little congestion in the wicks. You could put a line right there across that and say, yeah, crossing that line, which was right around the 154 level. See, that open was 153.98, close enough to 154. And then just trade accordingly. Have to love horizontal lines. Well, you don't have to, but they can be profitable when you're using them in your trading. And remember, you know, systems aren't profitable, traders are profitable. So just keep that in mind. Whoops. Let's put this back to the pound. As we move through here, we can look here. We crossed that daily open, came back to the short zone a couple times. Once again, looking left, seeing the wicks right through that weekly open. And right now we're in the launch pad. I would be reluctant to go long. Slightly reluctant, I should say. You can see here we're in the rat zone. Range is large enough. In fact, we're right at the level here. of the smart rat. Bambino Flex says to go long. Pivot Trading Plan says go long near the pivot. I guess it must have paid off on the way up. Near S1, bias is long. We're nowhere near S1 at the moment. We're still in the central pivot range right here. Now that reminds me, there was a trader sent me a code from another trader, wanted me to make changes. Right now, traders, my schedule is so jammed. I barely have time to do what I'm doing. So working on somebody else's code doesn't even make it to the to-do list right now. So not trying to be mean, but it's just not going to happen. Now there was a trader that asked me to make a modification to one of my old indicators, and I was working on some indicators the other day, so I took the time, since it was my code and since the change was something I've done to other indicators, I went ahead and did that. So just to let you know. So missed pivots for the daily, we don't have any this month. We've been taking those pivots out very nicely. For the month here in November, we don't have any. We still have a missed pivot up here for the month of October. And for monthly, looks like we took that pivot out. We did take out that pivot, so no missed monthly pivots this year. Once again, in and out of that upper wick zone. And I was looking at this, and the other day I had changed the bars to, I think I changed it to 60, like the last 3 months, or last 3 months of trading, just to see if it makes that big of a difference. So you can see here, we're still, above the 70%. And so just looking at the recent, it once again, price just doesn't like staying in that wick zone. For the week, right now, 214 pips of range, 66 percentile over the last 12 weeks. We did break out of the previous week's high by 5 pips. We broke out of the previous week's low by 10. That makes this an outside bar. High minus close for you red rats, 106. Close minus low, 108. So pretty much right in the middle there. Not bad for you weekly open crossover traders. High minus open, 79. That's to the north, and open minus low, 135 to the south. So once again, pips to be had, pips to be banked. Walmart tore it up this week. I'll have to let him tell you how many pips he made. He might not even be on next week. He's taking another vacation. He's enjoying life. You can see here on the M1, the ranges are down, but usually we look at the 30-minute chart here. You can see it tried to launch out of the launch pad in the 40s, but it didn't quite make it. I'm looking at this red daily, so I'm thinking, trading pullbacks. Usually like to trade with the H4 and M30 candle color, but this is a new H4 candle, so those two are going to be the same. Just to note, because you can see here, these are all the same, because we're still in the first 15 minutes of the H4 candle. And right here we had a high or low short trigger. Might have been good for a pip or so. Here was a lower high trigger. As you can see right now, if you just stayed in the trade, you'd be up 14 pips with a possibility of maybe about 18 if you sold it that high. Once again, just simple horizontal lines based on price action. Oh, we're at 58% of October's ATR. Okay, we did not push the range, so we don't need to see the year-to-date accumulated range by month. Just once again, get an idea, we're at 214. So we need to push that range, or we'll be the lowest over the past 20 years. Trade reminder. Let's see, let's take a quick look at the monthly. Lower high, lower low. Sellers weak control prices in the previous month's candle body. We look at the week. Sellers strong control on the weekly chart. Higher high, lower low. That gives us an outside bar once again. We did exceed the previous range by 14.1 pips. Price between the wick zones, once again in that candle body. And drop down to the daily. Previous bar was an inside bar. Price between the wick zones again. We crossed below that pivot. Sellers strong control. And let's see, we also crossed below the previous midpoint on the daily. So, fellow traders, let's see. I did do a couple of mods to indicators. I'll have to get them out there. I added the bid and ask lines to the TROHL5 because when you use the standard bid and ask lines, you get this all across the chart. And it was just like, why do I even have, I don't like this. This is like, why do they even do that? I guess because not everybody likes to use part of the chart to have indicators, you know, digital displays or multimeters, whatever you want to call them. So I made that change. I played with a couple of other little trade triggers, and they seem to be allowing me to make or take profit. And as you can see, once again, H4 now matching the color of the daily, and that's why I was reluctant to go long. So I think we've only got 61 pips of range. I don't know if we're going to push that range for today, but we definitely fell out of the launch pad. Might try to launch again. And you can see here that higher low trade trigger would have been worth 4 pips at the moment. But I want you to notice something here. You can see it drops down a few, then it comes right back to that point and comes back down. You'll see that pattern repeat a lot. You know, down here, let's see, where do we have a lower high? Right here, you can see, and remember, these are dynamic. We're looking at the last 34 bars. But you can see here we launched, we came back down and touched it and then took off. For some strange reason, that pattern seems to repeat. So in that first trade, you grab a pip or two, any sign of weakness, bail, and then if it comes back, you then take advantage of it. And you can see right here, we had a lower high, we had another, oh, I'm sorry, a higher low, and then it came back, right back to that level, went down, and that's just seems to be the way of the way it works. Now, notice also off a 3-ball, it usually will move further than off of a 2-ball. So that's it, fellow traders. Hope you have a fun and safe weekend. Be careful out there, and always remember, never forget, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is TheRumpledOne, over and out.